Hello and welcome back. So this is a video for you who are a shareholder of Berkshire Hathaway or is planning to become one. I write about Berkshire Hathaway on my blog, which is in Norwegian, but you can translate it. And I write about quality companies in general. And Berkshire Hathaway, for me, this is my biggest holding privately, because I believe that it's such a good group of quality companies that I believe the intrinsic value will grow over time, and I think it's a good investment for the long term, though. And it might be for you also, but it depends on what price you buy it for. And I will tell you in this video if the stock seem to be undervalued, or how much Warren Buffett himself is willing to buy back the shares for. So the idea of this video here is to tell you about the buyback of shares, the repurchasing program of Berkshire. And why do we do that? Well, let me show you here. Berkshire Hathaway has been buying back shares the latest years. The last 3 years, they have been buying back massively, actually. And buying back shares is an alternative to buying in other great companies. For example, they have been buying the Apple company, Apple, for more than 30 billion. They laid out more than 30 billion in cash to get their biggest investment, or their most successful investment the latest years. And in fact, Berkshire Hathaway has been laying out more cash buying back their own stock lately. And it has been amounting to more than 60 billion. So imagine that. They have been putting more money into their own shares than they have put into the Apple stock. You can read it in this article here, that they have put in roughly $2 billion the last year. And over the last 3 years, or between 2020 and 2022, they have been buying back for nearly $60 billion. And why is that important? Well, in the letter that this is a letter that Warren Buffett wrote in 2014, 50 years after he took over Berkshire Hathaway, and he shares an insight here with you that the Berkshire Hathaway directors and himself will only repurchase shares when they believe they are to be below and well below intrinsic value. So that's actually quite important there. They will only buy back shares when they are much below intrinsic value. And if you have these wonderful capital allocators here, and Warren Buffett himself, if they can show you when they buy back the shares of Berkshire Hathaway, for example, then they are saying that they believe the shares are they're worth much more, and the price is well below intrinsic value. Yes, so we can see here, as we saw in the letter, he writes that they only buy them back when they are below the intrinsic value, and you can see in the ticker terminal, for example, you can find an affiliate link on my website, or in the link below this video, perhaps. You can see that they have been buying for a lot of billions, roughly 60 billion here in 2020 and 2021, and a little bit more the latest 2 years. These numbers here are per half year. And you see that they are aggressively buying but in 2020 and 2021, and less, but also buying back in the last years. And you can see here on the price that the most aggressive buying has been between 2020, the second half year of 2020, which the price was then roughly $200, and they were buying aggressively up until roughly $300. This is the B share of Berkshire Hathaway. So imagine that the Berkshire Hathaway has been allocating $60 billion or more in the interval between the share price of 200 and 300, roughly. So that's a good insight. They believe that the share has been very much undervalued at that time, and you can see it later also that the stock has been increasing. And I can show you also the latest repurchase info that I have. If you see, I can show you here. The latest in June, they had to share with us that they bought back 2 million shares at the price of 335. That's roughly 1 billion more in repurchases, and that's a fun fact there. That's about the same price as we have today, actually. At the time of this video, the share price is at roughly $330, and we can see that Warren Buffett has been buying back shares at this price. So not so aggressively as back in 2020, 2021, but still, he believes it's a good use of cash now. And is this this is not investment advice, of course, but education on what we believe is what is how do we see if Berkshire Hathaway is undervalued or overvalued according to what Warren Buffett does. But he writes, and you can see his insights here, that he writes that if you should, if you want to buy Berkshire Hathaway, you can. He assures you that first, he shares that you will almost. You have almost no chance of getting a permanent loss of capital here, because the intrinsic value per share is almost certain to advance over time. But you can make a bad investment if you're doing it for short-term trading or short-term. If you want to do this with short-term, you shouldn't invest in Berkshire Hathaway, because he writes that you should invest in it for at least 5 years. Because the market can do, there can be market fluctuations. You have the quote from Benjamin Graham that the market is a voting machine over the short term and a weighing machine over long term. So you should hold your shares for at least 5 years. And he also mentions back then that you shouldn't buy it at more than 2, like price book 2. So a premium, you should be careful about laying out too much, because then you have to wait much more to get the payback. And you can see that the price book is roughly 1.5 now, and that Warren Buffett has been buying, and he has been buying more aggressively when it was lower. So that's the insights that I would like to share with you in this video. Warren Buffett has been doing very well with Berkshire Hathaway, as you know, for more than 50 years. So when he wrote this letter, he had been doing 20% every year, but because it doesn't mean that this will be the future return, because Berkshire Hathaway is way too big now. But nevertheless, Warren Buffett is still betting his cash to be well allocated into Berkshire Hathaway at this price. And I find that quite interesting, and I wanted to share that with you. So I would encourage you to read the letters of Warren Buffett. You can find them on berkshirehathaway.com. I have read every single letter several times also, and that has been the best education that I have found when it comes to investments and being a good investor in the long term. So I really recommend you reading that. It's for free on the website, and you can get it on Kindle, for example, or on Amazon for I think less than $5. Okay, yeah. So feel free to check out my website if you want to translate it. It's all in Norwegian there now, but you can find some articles I write about quality companies and Berkshire Hathaway and long-term investing and companies with a durable competitive advantage. I hope to see you as a reader there, and thank you for watching the video. See you until next time.